Oh, good golly. Slack is taking a shellacking. Slack is getting slacked. What can I say? Down over 16% after hours right now. Pretty rough, I can't lie to you. You do need to mention, obviously, year to date. Stock is still in a good spot, Started the year at around $23 mark, so it is still green on the year. I got to give you credit for that, even after this horrible drop. But who knows where it ends tomorrow morning? We'll see. But just reported earnings, and obviously investors are not too happy about that. I'm not going to say I issued a warning, but I did. I did tell you not the best stock to buy into earnings, If we look at these, we'll take a peek, and you might get a little curious here. So non-GAAP EPS beats by 3 cents. It was even, and GAAP EPS of negative 13 cents beats by 1 cent. So overall, you think relatively quality. Relatively quality earnings, right? It's a beat there. It's a beat from a profitability perspective, and we like it. Even the revenue, $215.9 million, up 48.9% year over year, beats by $6.68 million. That's a big beat, and a nice growth year over year. So big beat there, and the stock's still down pretty bad. Calculated billings, though, was a decrease, 218.2 million versus a consensus of 226.3, and I don't think that's the entire reason why that's the case. Just interesting to see. It's raised its full year revenue, now seeing 870 to 876 versus 855 to 870 previously, and a consensus of 847. So big hit there. Loss expected to be 13 to 14 cents. And it was 17 to 19 before. So obviously billings did not meet the consensus. They added 8,000 new net paid customers, bringing paid customers over 130K, above the consensus of 128K at this time. Paid customers with average recurring revenue, or annualized recurring revenue, I should say, over 1 million, increased from 49 to 87. So again, that's a big stuff year over year, big jump year over year. What can I say? They do have a presentation for me, which I'd like to see. We'll be looking at this presentation. The guidance is a little bit low compared to, but for the full year, it's good. Let's take just a little gander at what they have to provide for us. So, quarter two revenue, as I should say, actually, sorry. Overall, you see an outperformance of $8 million. Okay, $8 million. For the full year so far, they're outperforming by, that's right, $10 million. So, year-over-year growth is looking good. I can't lie to you. This is some of the weirdest charts I've ever seen. I can't lie to you. I just can't do it. From a non-GAAP operating loss, they're outperforming by $13 million. Should have been doing from previous guidance. They should have been losing 20 mil. Now they're losing 7 mil. Hey, that's not too bad. That's not too bad at all. What can I say? Revenue, calculated billings, and trailing 12-month calculated billings. You do see overall, from a guidance perspective, they beat guidance. Pretty good. Calculated billings, obviously, a little bit lesser. I mean, we can't lie about that. Calculated billings not necessarily where they want to be, no doubt. Slack users are constantly engaged. Average hours connected to Slack per day has been increasing, as you can see, from the same quarter last year was around 9 hours. Now it's 10 plus. Average minutes active, not quite as high as Q1, but it is higher year over year, 100 plus versus around a 90 plus. Interesting numbers that they're giving there. Interesting. They have 2,300 apps, obviously, in the directory. 700,000 custom apps and integrations used weekly, and 820,000 active developers, baby. So overall, customers using Slack Connect has increased. You can see overall pretty exponentially year over year. Pretty nice to see that. And connected endpoints, overall devices using it has increased as well. Pretty nice to see. And it obviously increased in customer adoption. Year over year growth is looking good. It actually hasn't really slowed at all through this. It's been pretty consistently around the 30% range. It's good to see that. Paid customers rising, and obviously your net additions rise as a result. So net dollar retention rate around 125% for existing customers. Obviously that's why it's retention. A little bit down, slight deceleration. And you do see a slight deceleration in large customers as well. But again, there's, it comes a cap to that where there's only so many large customers over 100,000 that they'll be able to add. So you got to understand that. So right now, 49% of their revenue is made up by customers over 100,000. Pretty crazy to say. People using this lovely service. Obviously, you have Stripe, Northwest Mutual, Peloton, Unity, Pan American Life, Wayfair, where you can sell children, DoorDash, Iris, close to the internal garbage pet tax dealers, United States Office of Personnel Management. Believe it or not, who knows? HSBC, Gymshark. All right, we've talked enough about them. Okay, get them out of my screen. I understand. Remaining performance obligations has definitely seen a bit of a decline if you're talking about quarter over quarter. The growth isn't quite there, but it still has gone up. Revenue by geographic standpoint, nothing major has changed. 22% from U.S., 38% international. It's been really consistent over the past year. Free cash flow has seen an improvement. I can't lie to you. But obviously, not quite, a positive earner. If you're talking about a GAAP perspective, still a money loser. But we'll take a look at that. Non-GAAP operating margins decreasing, which is technically increasing. Decreasing negatives, increasing, is a better way to say that. Net loss, you see good improvements here. Still lost $2.7 million, but that again is an improvement from $51 million the previous year. So definitely improvement on that aspect. And obviously last thing I like to look at is the balance sheet on a company like this, because if they're a money loser, I want to see if that balance sheet's able to support them without them having to necessarily go out and invest. They give me a 6-month comparison. They flooded cash on this balance sheet, if you might notice. So total current assets of $1.7 billion versus a $970 million mark. Really 6 months prior. Now we're falling asleep here because these earnings are boring. Slack. Now, total assets in general of $2.2 billion versus $1.4. So again, I'm expecting to see the liabilities increase by just as much. Total current liabilities did not budge really all that much. $518 million versus $519. Didn't budge at all really. But you see a massive addition in these convertible senior notes that they use to cash in for extra cash on hand. And that's a lot added. Oh my gosh, $1.3 billion versus $700 million. Definitely need to mention that. There's no doubt. Total stockholder equity did actually increase though, so the balance sheet did rise. The balance sheet grew just a slight bit. So it is positive in that aspect, and the balance sheet in general is growing. So you have good things to say about Slack. Obviously, there are some good things, but from my perspective, I'm not a huge fan of this one. Still a market cap of $16.5 billion with an annualized revenue. If they meet their goals of $700 to $800 million, just not necessarily the valuation I like for a company that it's growing. There's no doubt, but again, last year only brought $400 million in revenue. It's still it's a fast growing company, but all things considered, I just don't like the valuation still, even after this 17, nearly 18% drop. It could be a lot worse, though. I can't lie. I mean, this valuation is cheaper. Under 25 is a lot more tolerable than anything that was over 30. It's all I'm telling you. But still, rough to see if you're a Slack shareholder. And if you buy it, I can get it under 25. I can get it. I just personally don't want to. But, hope you enjoyed.